Welcome back to another episode of my trading vlog, where most of the views come from returning subscribers. If that's you, I'd appreciate the like. If not, consider subscribing. I've got a lot to go through today. Of course, we'll hit AMC and GME first. That's what most people want to see. And then we'll get into the meat and bones, talk about SPY, the stock market crash, and maybe I'll even do a little narrative here about what I believe is actually happening. Here we are in AMC. You can see the big meme run on the left, and then of course price just starts to consolidate and fall down and grind sideways through a tiny trading range. I think eventually you'll be trading sideways through a tall trading range, but for now we're just grinding sideways, spinning on that 496 level, which is a bearish continuation level. We're just waiting for the price to move one direction or the other here, but this is moving sideways, and that's what I was expecting yesterday, and I would actually continue to expect that moving into next week. Looking at APE, of course, same story, just grinding sideways. Obi-Wan, if you're in the Discord, you've been watching this guy sell contracts on AMC, and that's been pretty profitable, especially when the price is grinding sideways. You can sell options, and then as price drops of those contracts through theta, you reap gains. Moving into GameStop, we've reached the targets, and I've been saying that we could look forward to a nice little pop up, a little bump higher, and that's definitely what we're starting to see here. We've had an initial impulse, as to say, this is the new trend, I believe, and this is a reactionary trend coming down. Typically, we only see overbought seen once if this is a wave B and not wave A. We'll get more clarity later. If we get below 2084, this is our new bearish continuation level. I'm just going to duplicate this and pull it down here. I'm using the initial impulse of this move to decide whether or not this is a B wave or wave A. Of course, we could be moving through a motive wave extension, but we'll need more information before we can get into that analysis. Now for the meat and bones. This is what I'm excited about. Let's go look at SPY. Let's go. Now this chart, it's pretty awesome, I called the top of minute wave 5 up here at 727. This establishes that that uptrend is over, and we're looking for now corrective waves pushing lower. And I started a motive wave count to demonstrate that we're going to start a new impulse down. A lot of this speak may not make sense, but it just means stock market's going to correct. It's going to come down. And I was saying that with a lot of certainty as I was analyzing an inverse ETF of SPY. Essentially, you can buy that ETF long, like stock, and well, it's ETF, right? So you buy it long, but it's actually the value is pinned to the short side of SPY. So as the market drops, SPXU rises. And I have a hard time explaining that to people, or maybe it's a hard concept, but I've been doing really well there. So what you're looking at, obviously here we have a converging couple of trend lines, and they're tilted downward. We're going to be looking for 5 waves of impulse. Remember, 5 waves of impulse. You may look at this and say falling wedge. Here's the thing. Go back and watch my video about fake chart patterns. This is not a falling wedge in this wave position. That is to say wave A. That's the first motive wave to come after wave 5. If that wave is pointing down like this in a wedge, it's actually a leading diagonal triangle if there's an overlap between waves 1 and 4. And so that first impulse wave down here, I take that low, and sure enough, wave 4 pops up into this range. Let me count these for you. 1, 2, 3, 4. So 4 is a reactionary trend coming higher, and it moves into the bottom of the first impulse, 1. Nice. This gives us that overlap that we need to really call this a leading diagonal triangle and not a falling wedge. The next thing we're looking for is alternating waves of 3 and 5 between opposing trend line touches, which we definitely have. Wave 2 is a 3-wave form, A, B, and C. There it is. Wave C or 3 is going to be motive. Sure enough, this is definitely a motive wave. And you can see I started a motive wave count through here, and then I just stopped because we were obviously extending. I didn't know how long we were going to extend. So I just stopped. Let's use an extension tool through here. Looks like this might be the right place to do it. Boom. Target at 448. There you go. Not very hard, right? If you know where to put those extensions, you can get those price targets very easily. And you can see how this 452 level became an important level of bull or bearish continuation through here. Anyway, sorry, I've got SPXU on the brain. We'll go look at that chart too. What we saw today was wicked, absolutely brutal. I was going through and I was just going through the painful process of labeling this corrective trend. I hate wave B. It's official. Wave B is my least favorite wave. It does whatever it wants, and it's just the most unpredictable of the waves, I believe, because it is inherently chaotic. Anyway, here we go. So you can see how we have actually kind of a broadening pattern through here, right? And you might say broadening bottom, but whoa, hey, hold up. Not a broadening bottom. It's not in the right wave position for a broadening bottom. This is a reverse horizontal triangle in wave B, which signals continuation of the previous trend, which was down. There's a lot of easy chart pattern analysis mistakes to be made here in analyzing SPY, and I can really understand why it's so hard, because everything is very complicated. Elliott wave seems to be the only way I have found to really be able to predict what the market is actually doing. And as price came down and started to grind sideways, I just started to count A, B, C. A wicked weird B wave. This is why I hate wave B, because it does whatever it wants. And you know what? I think I actually drew this triangle in the wrong spot for you. Let's do this, because triangles don't typically just start at the bottom of the incoming trend. They often offset, and they're called running. So here you go. This is our first point, right? A, B, and C, 3 waves, giving us the first point of 5 in the triangle. So I'm going to count the points of the triangle. Here we go. 1, 2, and then this should be 3 back here. Let me pull this down. 4, and then 5 actually comes up into wave E. This is a big one. That's a big swing, right? We get a touch here too. But really, I'm looking for the 3 waves, right? And this is an impulse wave down. This is 3 waves up, which may be impulse, and then B, C. This was really tricky. There is something in here that it probably isn't counted or shown quite right, but I got the concept close enough. I got a 90%, so I passed the test. When price overthrew the top of this trend line, I said, no, that's the last impulse in a horizontal triangle, and that typically misleads everyone because it overthrows or underthrows that AC line, which here is the top trend line. Point A back here, the second touch being point C, and then this being point E. Boom, bursts up and out. 452.58 is bullish reversal. I waited for the back test. It came, and when we got that test, guess what? Price just broke down and it started falling. Just tugush. And the volume picked up, implied volatility started to soar. And you know what the best part was? I wasn't even watching the charts here. I was stressed out. I saw the price coming up through here, and I said, this is not what a motive wave looks like. This is a weird trend through here. It kind of looks like a 3-wave form more than anything else. Just awkward, not super. I mean, maybe 453. That would be the bell. The markets are officially closed. Yes, that means that I've been making the video for 10 minutes, which is probably longer than anyone's been watching. But honestly, I'm just like outraged. Like, come on, give me some credit. I've got to be giving some of the best analysis on YouTube right now with these forecasts. I mean, come on. Oh man, being openly bearish, calling reversal when the market's at peak complacency. Give me some credit. Hit like, subscribe, donate. Come on, do something. Share the video. I mean, I called AMC. Oh, fuck. We're just, no, not going there. Okay. At any rate, we can see the price now is coming down and continuing a new impulse heading lower. And this could very easily be wave 1 of 5, in which case I'm actually going to be looking for a half staff tilted formation through here. And if we get this, then this first impulse is just the first half of a push. Okay. Just like the name implies, half staff formation. That's half of the full push, taking us down to 442 on the nose. Incredible stuff. And this, of course, fills one of the gaps that we created in this big bullish push upward, which I called the everything rally like months ago. Like, seriously, the end of last year, I was like, looking for the everything rally. If this reverses, it's the everything rally. Well, sure enough, the everything rally came through, pushed everything up. Now I'm calling, hey, this is the top. This is the top. It's right here. We're turning around, and sure enough, here we are. We're dropping. 442 is the next target if we go down. Now, there is a very strong chance that this will go sideways for a little bit longer and create a longer corrective trend, which will slow the downtrend down. What that's going to do is it's going to catch a lot of people who are getting on board too late stuck. And so we could see a reactionary bounce higher. It just depends. Is the market going to vacillate, go into panic mode, and crash? Or is the market still believing that we're going to go to new highs? And if that's the case, then we're going to be watching a sideways grind. We have CPI coming out next week. That's going to be a big impact, big impact. I think that we're going to see 2 things in the future. That energy and food will rise in price over a long time. Okay, it's going to be a longer trend. It might be slow, but it's going to be longer. And that inherently is going to spook the markets. And we're going to start to see a what do you call it? A rotation. And it's going to be interrupted by a lack of liquidity. As treasuries dump, banks are going to suffer losses. just the way it's going to go. And this is what I'm really thinking. Ready for this? Treasury bonds that are used as collateral for margin will be worth less and therefore will not support as much margin. They won't make margin requirements as easily. As margin requirements become more stringent because rates are higher and volatility is higher in the markets, the collateral for that debt will decrease in value, and that will lead to margin calls, not maybe, wiping out whole hedge funds, but it will probably cause a pullback. Margin will decrease, positions will be sold to meet the level of collateral that is decreasing. Anyway, that's what I think about that. And we can go check on bonds really quick. I guess I'm not going to get to a whole lot of stocks today. TNX today dropping. This is the 10-year treasury yield. This looks pretty reactionary. Now, this is the thing. Yields drop when premiums of bonds go up. So bonds were being bought today, which is interesting. Perhaps shorts taking profits. And that's what that could be. Bears can drive the price up too, right? Here, of course, the bears are driving the price down because we're looking at the inverse. Don't worry about it too much. Let's move on. Let's check out the dollar strength as well. This is going to be a longer video. If you're watching, this is great. Thank you for being here. I really appreciate everyone who's followed me for a long time. You know what's going on. You know that this is like some pretty seriously good stuff. Here we go. The dollar looks like it's in a sharp correction, right? But this is what I see. I see a sharp here and I see a sharp here. Two sharp corrections in a row? That doesn't work like that. This is probably a leading diagonal triangle through here, and we'll understand its shape better later. Maybe that's it. Maybe it's 1, 2, 3, 4 overlapping right there. 1, 2, 3, 4, 5 forming E. We have an ABC reactionary trend, of course, but I think this is actually impulse, and this is bullish. We'll watch dollar strength rise, which probably means inflation is going to come in high. And the Fed's going to need to raise rates, tighten policy, which will strengthen the dollar relative to other currencies. Remember, what other countries do with their currencies is very important. It's very, very important because it's all weighted against each other. And I know at least the sterling is low. And I think Japan, actually, what they do recently, I think they raised rates, and that's not like going to be much help, but I don't know how that trade works. Those currency markets are complicated, and I'm not too familiar with them, and I can't see them as well. Obviously, I can see stocks really well, but the currency markets are kind of opaque to me. Anyway, let's keep moving through here. I'm going to go through a couple of big tech stock names now. Let's go through Amazon first because, of course, their earnings were wild. Of course, price pushed up, hit that top trend line, which I drew yesterday, and is now starting to reverse, find some resistance. It could still be a topping pattern, right? Earnings come out great. Everything pushes up. Guess what wave 5 is characterized by? Marginally improving fundamentals, but lack of growth. And I think that's what we're really getting from earnings. That's really what I think we're getting from earnings. And Apple definitely gave us that signal. Boom! That's a top right there. Called that. Saw those converging trend lines. Said, hey, we're at the top of minute wave 5 of minor wave 3. We're going to be looking for a sharp correction in 4 heading down because 2 is probably sideways. Can I get more time frame here? Let's do this. Let's see here. 1, way back here. 2, very flat. Very flat. In fact, right angled and descending broadening formation, which is a form of triangle. Now let's go back over here, and of course we're getting a sharp. That is an intense sell-off. Earnings are even positive, right? In some ways. But now we're seeing this big reversal. The charts predicted this. The charts predicted this, okay? I didn't really do any fundamental analysis on Apple. At any rate, what we should expect now is a reactionary bounce, and that will give a lot of hope to the bulls, get some people back into the market again, and then the next drug pull will come as wave C, which will also be sharp, is going to absolutely devastate the bulls again. Here we go. We're going to do a little extension tool. We're going to assume we found the low today, and we're going to come up to the next important level of support and resistance at 187. We'll probably find wave C at 172.94, and it could take us a little while to get there. I'd expect a grind through here. Maybe we go through a bear flag. Let's go to TSLA next. Tesla is moving through a triangle in a corrective wave, yes. And we're getting a downward breakout. We're getting another pullback. Tesla doesn't want to give up. It really, really doesn't. But let's go ahead and count these waves. Now, if this wave actually starts here, we have point A, B, B, C, D, E over through, but now we've come back into the pattern and we're going back down. Complicated stuff. If it gets more complex, I would expect something like this. Really, what I'm looking for is for Tesla to come down and touch this uptrend. The target's 230.88. Confirmation comes at a new low from point A there. It's close, very close. I'm not going to say that it's impossible for this to pop out and be bullish, but I doubt it. We're way closer to confirming bearish confirmation, especially as the market's in such a negative place. Okay, let's move on. AMD, you know, there's another tech name, right? Here we go. Guess what AMD is doing? It's grinding sideways. It's not really participating in the big dump. And guess what? That's what I have forecasted. Moving sideways through AMD makes a lot of sense. Let's go to NVIDIA now. Have a look at what's going on over here. Of course, going sideways, but we've passed bearish reversal at 1 degree. We're looking for bearish continuation on a higher degree. Price has bounced up off of that level in a reactionary trend, reaching 454, which was something that I believe I was actually expecting as well. This could be an ABC correction. 457 would be the high I'd be looking for through there. It looks like we got to 455.67, so it fell a little short, which makes sense because we have that initial impulse back here pushing or putting some resistance there. If there's a little overlap, then I'm going to have to consider, you know what we're going to do is we're going to take this smaller chart pattern out of the picture. Also, I'm just going to reuse this line. We very easily could have some reverse triangle forming through here. Oh my goodness. Can you imagine a reverse ending diagonal? How dumb would that be? But then we'd have a really good waveform through here. And this target coming down to the extension, maybe even down here, passing through bearish continuation. This makes a lot of sense. We're going to leave that there for now. What else should I go look at? I think I've hit the bases. Playboy's going sideways right now. Earnings on Tuesday. Don't miss those. Whew. Okay, this is really long. If you're watching, thank you. And happy trading. Oh, there is one more thing I want to talk about, actually. Ha! Let's go to SPXU. This is the contract that I'm going to be following and trading in the reverse ETF or the inverse ETF SPY SPXU. There's a ending diagonal triangle through here. We've broken out of that. We've had 5 impulses pushing higher. And so I'm going to mark my buys and my sells. So I pulled 30% here between the end of wave 2 and almost the top of wave 5. This really wasn't a bad play at all. You can see the bearish divergence here in the RSI between waves 3 and 5. Very typical. Waiting for a test of the uptrend to form the first reactionary wave before we push up higher. Note here to do this on the 15-minute time frame. All right. Whew. Okay, I think that's it. Yeah. Enjoy the weekend. Kick back. Relax. Happy trading.